Hello and good evening to Lottie Dottie everybody. This is Tim Davis coming to you guys from the Bullish Bears team. Today is Friday, November the 17th, and it's now about 5:30 p.m. And first of all, I just wanted to invite you guys who have not visited our website yet to please visit our website at www.bullishbears.com. Again, our website is www.bullishbears.com. When you get there, just browse our website and see all that we have to offer from new traders, old traders, investors, day traders. We have a little bit of something there for everyone that they can benefit from. And you can also reach out to us there. And you can also follow us on our Facebook page, our YouTube channel, of course. But if you go to our website, www.bullishbears.com, you'll find links there to all of our different social media sites. Okay, now this video, I told somebody recently that I would do a video on and I would call it "Trade It Like a Stock." And what I mean by that is getting into long call options. And I say long because you'll be in them. You can possibly be in them for 6 to 8 months or a year. And treating it like a stock. And before I go any further, I just want to show you guys where I got this idea to start from. That it could be possible. And a lot of people do different spreads, vertical spreads, call spreads, and different spreads to protect yourself when you get into options. And that's great. That's great, but for newbies, people who just learning how to just trade a stock, they ask a lot of questions about, well, how can I get an option, and try to let them know that options can be, there's a lot you need to know about options before you can just start trading options. You just can't trade it like a stock if you don't know much about options. Okay, it'd be best to make the safer trades like vertical spreads and call spreads and things of that nature, iron condors, things of that nature. But I ran into this guy a couple years ago, and actually became one of my mentors. Treated him as one of my mentors. His name is Tyler Shanelli, and he has a YouTube channel, and it's on the option trading coach. And I found this video just doing some some online search, and actually reviewed this video. I'm not going to play the whole video here, but you can review it at your own leisure. It's called "Learn How I Traded." Learn how I turned $16,000 into $131,000 trading options on Netflix. And I'm thinking, okay, well, he definitely had to do something to protect him from having losses, because with options, if you time decay will eat you alive. You're getting in and out of options. But what he ended up doing was he actually bought, call options on Netflix, but there wasn't, like options that were expiring within the next 2 weeks or so. These options expire like a year out. He bought them a year out, so they expired a year out. And I think some of these he bought close to the money, some of them he bought out of the money. But what he did is that he traded these options, and he bought several of them. So he bought several of them to give him leverage, and he held them for almost the entire year until he made a nice profit on them. And his strategy was, the minute he spent about $16,000, the minute he recouped his money, he would just use the house money. So once he doubled his money, he took his money out, and then he would just use the house money. In other words, using the money that you actually gain in interest. All right. So with that said, you guys can go to this video at a later date. So I'm going to show you some things that I thought was important for you to look for when you're trying to go out long like that and get into an option that doesn't expire for a year out, 6, 7, 8 months to a year out, in order to trade it like a stock. You want to make sure, if you want to trade it like a stock, you want to make sure that some key components that you want to look for in addition to just having a decent chart. So a lot of people, when they, trading means you're in and out of stock, swing trading, day trading, whatever, just trying to get a quick gain. However, when you're trying to buy a regular call option, a long call option, just a call option without a spread, anything like that, without putting it into this type of call option strategy, time decay can really play a big factor if you're trying to just get a regular call option on a particular security or equity. So you need to make sure that some other things you keep in mind. Now, first of all, you want to give yourself time. You want to have time on your side. So getting a regular call option, you want to put time on your side. So if I was to get into a regular call option of, let's say, Netflix, like the gentleman did, okay, I'm not going to get into an at the money call option on Netflix and it expires next month or it expires in 2 months. You're not putting time on your side. You need to put time on your side because time decay, the closer you get to expiration, the more time decay speeds up. So you want to put time on your side. So give yourself 6 months to a year out, depending on what your charts look like. Because you also need to make sure that the trend is in your favor when you do that as well. So I'm going to go over a couple things. But first of all, in barchart.com, I set up a screener to look for certain things that I want to look for in a stock that I would like to trade as an option. That I would like to trade long term, like a regular stock. Call option long term, like a regular stock. First of all, you want to make sure that you include in your screener or whatever stock you're looking at. You want to make sure that that you consider financials, as well as technical analysis. Okay. Because you want it to be a decent company. You don't want to try to go long term on a company you're not sure whether or not this company has growth potential, whether they're doing things right. That's sustainable, that can get you through this long call option for a year. So you want to make sure that they have some decent financials and some decent growth history that shows that they know how to continue to grow and make money. Okay, so in my screener on barchart.com, a couple things I wanted to make sure I have in here. Revenue. I want to make sure that the company is definitely making some decent money. I want to go on the high end side of things because when you go into options, you want to make sure that the company, first of all, is a very good company, very liquid, and you want them to be able to sustain itself and be a company that's making money. So for my screener, my first one I put in here was revenue. And for those of you who have not used barchart.com before, we did a video. You can probably find it within our YouTube channel. But very quick, if you was to go down here to where it says fundamentals. Sorry, that's not the one. Is this one? No, that's not the one I'm looking for. Go to financials. Maybe financials. Okay, financials. I just went down to financials and I clicked on revenue. And once I put the revenue up there, I'm looking for high revenue. So I put down, I'm looking for revenue at 150 million or higher. Okay. So I want the company to be making a lot of money. Now, the next indicator, the next screen I put down was debt to equity ratio. Okay, that's a financial that shows you how much debt to equity that a company is is reeling in off your money. So I went to Google, and I'm going to show you guys this too. Went to Google. So for those of you who don't know anything about some of these financial criteria, Google tells you everything. So debt to equity ratio. Pretty much what it says, debt to equity ratio is debt ratio used to measure a company's financial leverage, calculated by dividing a company's total liabilities by a stockholder's equity. Debt to equity ratio indicates how much debt This is important. How much debt a company is using to finance its assets relative to the amount of value represented in shareholders' equity. How much debt they're using in order to finance assets. So immediately I'm saying, okay, well, I don't want them to be using a whole bunch of debt. So you want that number to be rather low. That's what I would think. In normal circumstances, in regular circumstances. And I went to where it says what is a good debt to equity ratio for a business, and what it says is it's calculated by dividing total liabilities by total assets with higher debt ratios indicating high degrees of debt financing. Basically, from a pure risk perspective, lower ratios are considered better debt ratios. So I go back to my screener, debt to equity ratio. Actually, and some of these companies that I actually found here had a little bit more debt, but they was making a lot more money. I mean, the debt to equity ratio was around 2, but we're making a lot more money. But for this exercise purposes, I chose high to negative. And I don't even like negative because something I didn't like about negative, but you can leave it in anyway. And because after you go through, I mean, once you get your results back, you'll go through the list and pick out the ones that you like by looking at the charts. All right, so you want a low debt to equity ratio. So I went from 1.25 and lower. And you can actually, go to the very high ones, and you can find stock that you like. Because even some of the high ones, like I told you before, that if they're making a lot of money, they can still possibly, do well over a long period of time. All right, return on equity. Return on equity is another key measure that could be important to try to trade an option like a stock over time. Return on equity is the amount of net income returned as a percentage of shareholders' equity. Return on equity measures a corporation's profitability by revealing how much profit a company generates with the money shareholders have invested. I want them to generate a lot of money off the money that they invested for me. So thinking, I want that, to be a pretty decent number. The more money they make off, the more money they generate, will be better on your behalf. So return on equity, I want that number to be kind of high. I want that percentage to be high. So I went from, I really like anything from 20% and higher, but I started here with medium, 10% and higher. But I prefer 20% and higher. All right, now, you definitely want, if you're using barchart.com, you definitely want the rest of these in here. And as far as the other two, let me show you how you find those, in case somebody is wondering, well, how do you find those on barchart.com? So debt to equity and return on equity should be down here. For the filter, you go to ratios. Return on equity is right there. Debt to equity is right there. Okay. And my next screeners I have on here, of course, Trend Spotter. I like this Trend Spotter on barchart.com. You want all three of these. Trend Spotter signal, Trend Spotter strength, Trend Spotter direction. You want a buy signal, and for Trend Spotter strength and direction, I got from average to maximum. For Trend Spotter strength, from average to strongest on Trend Spotter direction. And those are pretty much found down here under the filters where you go to, I think it's, I want to say it's opinion. Yep. Trend Spotter right there. So we're halfway there. Almost got this whole thing set up here. All right. EPS growth versus previous year. I threw that in there because you want to see growth year over year. So I put EPS growth. And for those of you who don't know what EPS growth is, same thing. You can always go to Google, and Google will tell you everything you need to know. It's earnings per share. Earnings per share is a portion of a company's profit allocated to each outstanding share of common stock. Earnings per share serves as an indicator of a company's profitability. Okay, so that's why when you see quarterly results coming out, a lot of people are looking at the earnings per share because you want that number to be good. You want it to be a good number. You want it, and it would be nice to see earnings per share increasing year over year, quarter over quarter, if possible. Sometimes it doesn't do it every quarter, but year over year is great, increasing every year. So I put down I wanted to see a value greater than 2%, and where you find that at, EPS growth year over year. That should be down here under growth, if I'm not mistaken. No, it's not that one. It's under financials. Let's see. Nope, not that one either. So this one. Yeah, here it is right here. EPS growth versus previous year. Okay, so that's under per share info as well. All right, and next one, I just put down last price. When I'm trading options, I don't look for stocks trading less than 20 bucks. That's just me personally. I mean, whatever you prefer, you can pick that number or you can leave it out. So I got down at least from $20 range up to $190 range. You can go higher. It depends on how much money you want to spend. So $20 range to $190 range is what's good for me. And 1%, 1 year return, and pretty much I found that I did find it under growth. So under growth, I would like to see at least a 1%, a good return over the past year as far as financials goes, as far as money is coming in over the 5-year term. Over the 1 year term, over the last year. So I like that one. So I put that in there, and I want that to be medium to very high. And anytime you're trading options, you also want to make sure that the stock that you're trading is very liquid, which means there's a volume is heavy within the stock itself, as well as I'll show you guys this later, as well as in in the option chain itself. So for daily volume in the stock itself, I got from 500,000 all the way up to 500 million. That's what I put on here. And then you hit see results, and this is what you got. This is what I came up with. You can adjust this to suit your needs as you see fit. So you look through this list, and you'll see if you see something on here that you actually like, something that you heard of, or something that you just want to test out. One thing I liked, I saw this the other day. I've been watching this Lululemon, and that chart looked pretty good. T-Rowe price is on here, THO, which is what I traded before. But if we look at the chart of Lululemon, let's see what the chart looks like. Because like I said, you also want to make sure that the stock is trending. This is another one that's actually on here too, Valero Energy, and we'll look at that one too. But if you look at Lulu, I think it has a pretty good chart setup too as well. Lulu has a pretty good chart setup, and what I'm looking at right here is a monthly chart, because since the hourly and the daily, it can play a factor. But if I plan on trading like a stock, and I want to be in it for several months at a time, or several weeks or several months at a time, then I want to make sure I look at the weekly and the monthly, because I want to see how the chart looks on the weekly and the monthly to make sure that the trend is starting to change. And looking at Lululemon, looks like it traded nicely up until you got to 2013. Then it started to trickle. It started to pull back. It didn't go all the way back down to its lowest low, which is back down here in 2009. Went down to a certain level. Then it started to go higher again. It didn't go back up here to 82.50, which is where you would like to see it. Pull back almost back down here to this low of around 36.21. Pulled back, and then it started to rise again. So what I ended up doing is I said I want to draw a Fibonacci retracement from a reversal to where the reversal ended up to where we got a high point and another reversal. So I started this one at this particular end of this reversal right here. So I put a Fibonacci retracement on there, and that was around from 40 to 44 up to around 82. It retraced almost all the way back down here to this 44 again. And then it's starting to move higher. So that's on a monthly. Now, let's look at the weekly. So this trend is like it's starting to trend higher. So I like this trend. Plus, they just had earnings recently, which is also another good sign. Now, the earnings were good, so Lululemon could be going higher. And as you see, the financials are good as well. So looking at this Fibonacci retracement on weekly, moving nicely. Retrace back to around the 78% retracement, hit there twice, went below it just here, and it's starting. Then after that, after it hit this area twice, here and here, went just below it. It's 78.6% retracement. Then it started to go higher, where it's meeting this retracement area right here, which is the 38.2% retracement. We traded in this range for several weeks, looks like, almost several months. And we finally got two green candles on a weekly chart. 1, 2, and if we dial this in a little closer, you'll see that the moving averages lines are starting to trend upward as well. So, good buying opportunity. So now, what you would do is look at an option chain. So let's go look at an option chain in Lulu, and I'm going to also look at one in Valero too, because it might be a little bit cheaper. Now, since if you want to have give your time for success with just buying a regular call option. So you got to give yourself some time. So this option is going to cost you a decent amount of money. And when I get in them, I like to get close to the money as possible. Doesn't necessarily have to be at the money. If the trend is showing higher, that means eventually the price should get above price that you want, that you actually the strike that you actually purchase. That's the ultimate goal, is to get it above the strike that you actually purchase. And you want to get well above the strike you actually purchase once you buy, because you want to be able to be profitable. So right now the price of Lululemon is at $66. So I want to go out to at least 6 months. So right here we're at 6/15/2018, which is a decent time frame, and we're at $66. So I want to look at a call option around, I like this 67.50. 67.50 would be ideal. Okay, so that one, the going rate and the spreads are not that far apart, so you like to have a close spread as well. So the spread between the bid and the ask. This is the bid column, this is the ask column. For that 67.50, it's only 40 cents. That's pretty 45 cents out to 6 months. So that's pretty decent. That's not bad. That's not bad. So that's the one I will be focusing in on. But one thing I don't like off the top is that the open interest and the volume seems kind of non-existent. But that's the one that I will actually want to purchase. I feel more comfortable actually going back and looking at another opportunity, because I like to see open interest and volume on the chain kind of high as well, or existent. I want to see somebody else buying it besides myself. And open interest, I want that to at least be around 100 or more. All right, so let's look at Valero Energy. So if you look at Valero Energy, current price on this one is at 82.88. So 82.50 is a good range. There we go. I like this one a little bit better. Open interest is about 544. Volume right now is 8. That could change over time. So that could change over time. You're getting in early. That could definitely change over time and continue to grow as you go later on down the road. So I will end up getting this one. 510 for the bid, 560 for the ask, which is a 50-cent spread. That's not bad considering you're gonna be in it for several months. Now, when I do get into it, I would like to a lot of times what I try to do is I don't like to go give them the ask. I wait till the trading day starts. Hopefully it'll be a down day. And if it is a down day or the price is dropping, I want to try to get it a lot less than what I first saw it at. So if I can get it around 510 at the bid, that would be perfect. So you can put in a limit order for 510 or whatever price you're willing to pay for. Okay, so and that's pretty much it in a nutshell, folks. And then what you can do, you know, you don't have to remain in it for that particular time. I try to give myself a target. I'll either give myself a price target or I'll give myself a percentage target. And if a lot of times I give myself a price target depending on what the chart looks like. Looking at this particular chart, at the weekly chart on Valero, and looking to see where price is now, my first target would be $66.31 where the price is. My first target would be at this first Fibonacci level, which would be 72.91, around 72 bucks. That'd be my first target. Then I would reassess and look at the trend and see if TTM squeeze is looking a little bit better. If you know, light blue lines are starting to get higher, and if like they're starting not, I mean, it don't look like it's not fading out, then I may sell right here and take profits, or I may continue as long as I still got time left. My 6 months is not up. So right now, it's like this trend wants to go to $72 first, possibly even back up here to 81. So you can follow the trend as long as the trend is still trending higher. You can stay in that particular space. The trend is your friend. Remember that. Up to the next Fibonacci level, or you can give yourself a percentage. I want to, you know, gain 10%. Or you definitely want to, at least, first of all, you want to get past your strike that you purchased. So you want to be above your strike. So if I purchase the 67.50 strike, I want to at least get past 67.50. Once I get past 67.50, I'm looking towards my next level target on Fibonacci Retracement tool, which is 72.94, or all the way back up to where it created a high earlier this year and hopefully surpass that. All right. So that's it in a nutshell, folks. That's just a good, easy way to trade a call option like a stock and the things that you want to look for. Again, hopefully you guys learned a little bit off of that. Visit us at our Facebook page, Stock Market Community. And also, if you'd like to leave a message for me, you can actually go to our website, look up our email, and you could just send us, or you can send us a message by going on our website there, and I will definitely get it, and I'll try to respond to you as quick and as soon as possible. Again, that's my video, and I do recommend you guys, and normally I hardly ever recommend outsiders, but this video was a very, very good video. I learned a lot from this video. Again, it's called Learn How I Turned 16,000 into 131,000 Trading Options on Netflix. Okay, again, the gentleman's name is Tyler Chinelli, Options Trading Coach. Till next time, you guys have an awesome day. This is Tim Davis from the Bullish Bears team signing off.